and he said that the Fed's job was to take away the punch bowl when things got too frothy. But now Powell's mantra is, let's keep the punch bowl going. Let's increase the punch bowl. Thursday, February 25th, 2021, Monaco 64, home of alternative economics and contrarian views. So the Federal Reserve is okay with Americans going hungry and cold. What does that mean? Well, it means that Jay Powell is misleading the public and Congress about inflation. I listened to some of his comments yesterday about inflation. One of the congressmen asked him, M2 has gone up 25% in the last year. Isn't that inflationary? And he said, no, M2 doesn't matter. It's not reflected in inflation anymore. Even though, of course, inflation is the inordinate increase of the supply of money and credit, resulting in higher prices. This is what people need to understand, and this is how they get away with it, because the Federal Reserve and the government, they tinker with the measure of prices. The Federal Reserve uses a joke of a measure of price to calculate inflation. And I'll show you what they use. They use the personal consumption expenditure price index, excluding food and energy. Yes, and Mr. Powell said, whoa, yeah, inflation's only running at 1.4%. But he forgot to tell Congress and the American people that unless you have to eat and drive or heat your home in the winter, yes, there is no inflation, right? So who in the world doesn't eat, have to drive, or heat his or her home in the winter, or cool their home in the summer in Florida, for example, and other places with air conditioning? I mean, it's crazy. And I always go back, and that's why I get actually quite upset with people who are supposed to be in the alternative economic sphere, in the Austrian economic sphere. People who still talk of inflation as the CPI. People who actually spout out things like food inflation or whatever other kind of inflation, because there's only one inflation, and there is no such thing as food inflation. What there is monetary inflation resulting in higher food prices or any other price. So I will have to go back to my definitions here from the 1970s Merriam-Webster dictionary. So it says inflation, an abnormal increase in the volume of money and credit resulting in a substantial and continuing rise in the general price level. Resulting, right? It's the consequence of it. But unfortunately, the government, academia, economics, academia, the Federal Reserve, the powers that be, they've inculcated into people that inflation is the PCE, and they tinker with the number. And if you don't believe me, go to shadowstats.com. He looks back at 1980, 1990, how they used to calculate CPI, which they call now inflation. And the 1980 version, we're running around 10%. So is it any wonder that I see loads of videos out on YouTube, especially from Jeremiah Babe, for example, out in California, where people are losing their homes, they're on the streets, in tents, and that's all over the United States. Well, that's the result of inflation, higher prices. People can't afford to rent anymore. They can't afford to buy food. We saw last year that long line in Texas of cars lining up to get food, right? So that's why I said the Federal Reserve is a threat to the American public. Of course, it's not a threat to Wall Street. I saw a story today in the FT that Goldman Sachs CEO and also the CEO of BlackRock, Schwartzman, are calling for more and more stimulus. They're saying that the Congress has to pass this 1.9 trillion stimulus. Are they worried about the general public? No, they're worried that their phony bubble stock market asset bubbles will implode if Congress doesn't create more inflation. And I saw that Powell was asked about fiscal policy and he refused to answer. I guess he's okay talking about it when he's not in front of Congress, because the central bankers have been calling for more and more fiscal policy increase. So that was just another dishonest and move by Powell. He's really something else, this guy. He's a big threat. And to the American public, I would say he's not a threat to Wall Street, of course. And they're the people who control everything. And I just wanted to show you another definition of inflation. This is from the Oxford Dictionary from 1925. And you might ask me, well, this is for almost 100 years ago. What are you talking about? Well, inflation doesn't change. It's purely a monetary phenomenon. So just because the definition doesn't have anything to do with what we have today, doesn't mean to say it is wrong. What is wrong is calling the consequence of inflation. And this is how they get away with inflating the system. It's not going to be the homeless person that's going to really hurt the Fed's plan. It's going to be big investors. And I think they're going to start to wake up. But this is what it said back in 1925. Inflate, abnormally increase states' currency, especially by issue of inconvertible paper. So there you go, inconvertible paper. That means paper that is backed by nothing like we have today, or fiat currency. So just to give you an idea, the congressman that was questioning Powell asked him about M2. He said, well, M2 is going up 25%, right? And it has. I've checked the numbers, as you can see here. But even worse is M1. M1 has gone up 355% in the last 12 months. And Jay Powell, well, he didn't mention M1. He should have, the congressman. Jay Powell, of course, didn't touch upon it. And as you can see here now, the Federal Reserve, I think they're concerned because a lot of people are looking at these numbers every week now to see what's going on. And people like me and Rafi Farber and others, and they got rattled because they're going to stop doing it on a weekly basis. And so we're only going to get it, I think, every month now. These numbers, they're becoming more and more less transparent. They're going to do a monthly average. So I would say that they could actually stop publishing these numbers altogether. I wouldn't be surprised. So, and also the Fed's balance sheet is gone up by 81.73% in the last year. So for all those people out there who say that QE is deflationary, I mean, and these are people who are supposed to be in the alternative economic sphere. Shame on them, really, because all it's going to do, it's going to help people like us who have been stacking. And yes, it is frustrating. Sometimes I wonder, what's going on. But yes, gold and silver are key to this, to maintaining this illusion that there is no inflation. And that's why they are fighting tooth and nail to keep gold and silver from going up. But I don't think they will succeed because it's not sustainable. People say, well, they have all the gold, the central banks. They don't. They have 17% of all the gold in the world. That's been ever mined. I know Bix Weir thinks there's billions of ounces under the Grand Canyon. I'm not too sure about that, but yes, they only have 17% of all the gold that's ever been mined. That's not a big percentage. They're controlling, of course, the markets with the paper game, with the shenanigans on COMEX, LBMA. And all we have to do is of course, unless we have an emergency and we need to sell our gold and silver, unfortunately, all we have to do is hold on to it and maybe add on to it if you have extra Federal Reserve notes after you've paid your monthly bills and you've spent all you've had to. So yeah, it's really sickening to see that people don't wake up to this. Yes, they're going to come with more and more socialist or welfare, help for people, but that help is not going to be worth anything as prices of real things start, keep going up. We've seen commodities, general commodities, zooming up, and yes. So now, with that, let's look at where the markets are this morning. Yes, the stock market loved the Fed comments. They don't care. They're not going to let the punch bowl go empty. They're going to keep filling the punch bowl. They're not, the kind of policy they have is that they won't even let the punch bowl go 1/3 empty. They're going to keep it full all the time. They're going to make the punch bowl even bigger. That's what the Federal Reserve is doing. And what's the reference about punch bowl? Well, I think it was a Fed chairman in the 50s. Forgot his name, Martin maybe. And he said that the Fed's job was to take away the punch bowl when things got too frothy. But now Powell's mantra is, let's keep the punch bowl going. Let's increase the punch bowl. And so let's look at where the markets are. This morning, it's 8:45 a.m. London time. Yes, gold and silver are very frustrating, the paper prices. And with all that's going on in other markets, it makes people feel a bit, am I doing the right thing? Well, you don't have to follow me. I'm going to stick to my guns. Well, I did notice, though, that the mining stocks yesterday did very well, especially the silver. So I'm happy with that. It outperformed the Dow. So you need to keep that in mind as well if you have mining stocks. But right now, we've got gold at $17.90, down $14. Why is it down? Well, because they're trying to keep people away. They want to keep people in this inflationary game, and they want to pretend that there is no inflation. Right, Bond King, who thinks there's deflation? So the high has been 1806, the low 1788. So we're near the lows here. Silver is at 2783, down about 10 cents, down 0.4%. High has been 2823, and the low 2771. So really, gold and silver, they're not really going anywhere. So they're just consolidating. I would say sentiment is really low or bad for gold and silver, because we're seeing cryptocurrencies continue to go up. We're seeing the stock market make all-time highs. I even saw that GameStop is going back up, and gold and silver are doing nothing. We're seeing commodities as well. We got copper now above 430 cents or $4.31. We've got crude oil almost at 64 WTI, and gold and silver doing nothing. It's very frustrating, but I think you need to hold on to your guns. Anyway, the stock market is up 40 points. The Dow, not much. The NASDAQ is down 50, S&P down 1.5 point. Yeah, and the dollar continues to go lower here. It's pretty much unchanged against sterling, 140, 144. The euro's up 0.25%, 122. The dollar's up 0.25 versus the yen, though, at 106.09, and pretty much unchanged versus the yuan. And as I said, copper, oil are going up gangbusters. And yes, And bond yields are going up now as well, not only in the US, but in Europe. So right now the 10-year yield is at 144. That's the highest it's been in the last 12 months or so. So up another 4.5 basis points. The 30-year is almost at 230, up 5 basis points. So yes, they're saying that gold and silver are going down because real interest rates are going to go up. But as you saw, the Fed is misleading people about inflation or the price rises. They're going to keep basing all their policy on a rate with a one handle, which is ridiculous to say that prices are rising by only 1 or 1.4%. So I would say inflation is more like 10%. So real yields are actually not going up that much. And just look at the 70s, what happened. Bull market in commodities, gold and silver, and yields went up to 15.8%. So yes, as you see here in the UK, even in the UK, the 10-year yield has gone up a lot. It should be like 10% really. We are at 0.78. Someone made a comment in the video yesterday saying, how come the coupon in the 10-year gilt is 4.25, but the 5 years at 0.5? Well, the coupon is not the yield. The coupon is the original interest that the Treasury has to pay when it issues the debt. And then if the price of the bond goes up, the yield goes down. So the yield in the 10-year is at 0.78. But as you can see here, from last summer, it's risen from almost 0 to 0.78 now. And the German one as well, the 10-year Bund, which is the benchmark for Europe, that's gone from minus 66, 67, or even more here. Like last year in March, it was at almost minus 1%, and now it's almost at minus 25 basis points. So there you go. If you enjoyed this video, make sure you hit the like button. Please share it far and wide. Think about subscribing to my channel if you haven't yet. And you can also follow me on Facebook, Twitter, and all these other platforms below here. I wish you all a great day. Take care. Bye.